We got some great news for Broadcom stock investors as during the quarterly conference call with Wall Street analysts, the company's management team gave a very optimistic forecast for the rest of this year and the future. I'm going to talk about why that's great news for Broadcom stock investors, especially because the company boasts one of the best cash flow from operations to sales ratios. So, a forecast for great sales growth means a forecast for great cash flow expansion, which is one of the primary ways you value a business is the present value of all of the free cash flow you expect the business to generate in the future. So those prospects are looking great for Broadcom stock investors, not just for this year, but for the next several years as well.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Broadcom's management team said that we eventually expect at least three customers to deploy 1 million AI accelerators each in 2027. And this is largely for training their frontier models. And these partners are still unwavering in their plan to invest despite certain economic environment. So that was a relief for many stock market investors. Of course, Broadcom reported this quarterly financial result in early June and held this conference call in early June. And so this is after all of those Liberation Day tariffs were announced and then paused and then increased and then restrictions, etc., etc. All of that policy uncertainty coming from the United States leadership. And despite all of that uncertainty, you had their largest partners reiterate their commitment for these large spending plans. And that's great news for Broadcom. Usually what happens in these situations when businesses face an uncertain environment, when they can't forecast or predict with some relative amount of certainty about the policy in the countries they're operating inside, they'll just kind of take a wait and see approach. They'll pull back their investment. They'll wait and collect more information before making big decisions. And they might even cancel some of their big spending plans. And so that's what investors were concerned about with many companies following the announcement of those increases in tariffs. But thankfully, what we've seen from the recent reports, the recent announcements, including from NVIDIA, Broadcom, and others, is that these large hyperscalers are still spending and still planning to increase their spending. And that just goes to show how important artificial intelligence is for these companies, that even during this macroeconomic uncertainty, they're staying committed to this. They're not letting anything get in the way of their build out of their artificial intelligence capabilities. And I think that's a great sign for Broadcom. But just for the entire artificial intelligence industry, it's a good sign for, all of the players in this industry, including NVIDIA, AMD, the hyperscalers, the smaller companies like Supermicro Computer, Dell Technologies, Hewlett Packard Enterprises, CoreWeave, Nebius, all of those companies that participate in this ecosystem of building out the artificial intelligence optimized data center. It's really great news for everyone that the money going into the system is persisting despite this macroeconomic uncertainty. The company saying, in fact, rather what we've seen is that they're doubling down on inference in order to monetize their platforms. We may actually see an acceleration of XPU demand in the back half of 2026 to meet this urgent demand for inference. So in fact, what's happening, rather than these hyperscalers pulling back their investment, they're actually doubling down on one side of the AI investment. So I break it down into two sides. I know if you're an AI professional, you can break it down into more smaller categories, but I break it down into two categories, and I look at inference and training. So training is building that large language model, building that AI that's capable of delivering insights. And then inference is the actual insight that's coming from these large language models. So inference is the actual answer to those questions that people pose to the large language models. And inference is the way that these companies are monetizing on those large language models. So people are paying ChatGPT a monthly fee to access some of those premium features of inferencing. And similar with Google's Gemini and Anthropic and etc. Right? So that's where they want to focus on now, is because that's the part of their AI that's monetizing. So rather than investing in improving the models further from this point on, they're investing to make the inference more effective. They're investing to make the inference lower power consumption and more customized to the specific use cases. And that's where Broadcom sees this going. And they now anticipate that their fiscal year 2025 growth rate of AI semiconductor revenue will sustain into 2026. So these robust growth rates that they're generating, they expect will persist into 2026. And I know I talked about this in the introduction of the video, but I wanted to share with you a chart that I pulled from finchat.io. The operating cash flow to sales ratio for Broadcom is excellent and improving at 41% in the most recent trailing 12-month period. It's among the leaders of all of the companies I'm following in terms of the OCF to sales ratio. This measures how much a company turns into cash flow each dollar of sales. So Broadcom, when it generates a dollar of sales, 40 cents of that turns into cash flow for the business. And then it can use that cash flow for its choosing. And since it doesn't own and it doesn't manufacture the semiconductors in-house, that's a lot of capital the company can return to shareholders. That's also capital the company can use to pay down its debt. Remember, it does have a very elevated level of debt following its recent acquisition of VMware. And so it can use this cash flow to pay down that debt, which will reduce the interest expense, which will even throw off more cash flow that they can use to pay down more debt. And that positive virtuous cycle can feed on itself for several years as the company pays down that debt it used to acquire VMware. Management team has said that the acquisition is going very well, and they fully expect to return to their levels of profitability and cash flow that they sustained before making the acquisition. And that means levels of cash flow from operations to sales above 50%, which would put it, upwards in the best in class category of this metric for Broadcom. And so with a company that's generating or turning so much of its sales into free cash flow, you love to hear the forecast for sales growth being so optimistic. In fact, they're forecasting AI semiconductor revenue to be 5.1 billion in the next quarter, which would be up 60%. Now, the non-AI semiconductor business in the second quarter will be flat, and it was actually down in the previous quarter 5%. So everything non-artificial intelligence is flat or down, but everything related to AI is absolutely soaring. And this is what I hear from AMD, very similar to when I'm evaluating AMD, very similar to when I'm evaluating Dell Technologies. They're saying the same thing. The parts of their business that's connected to the artificial intelligence industry is booming, and the rest of the business, all the other semiconductors, are either flat or down year over year. And that's the story here. Businesses are investing in their AI capabilities, and this is coming at the expense of legacy capabilities, legacy systems that were built out many years ago before NVIDIA really developed this next generation technology for artificial intelligence. And then you had the mixing with OpenAI, ChatGPT, and that really created this boom in investing for developing these AI capabilities. Now, even though this was great news for Broadcom stock investors and the business is doing really well, the stock price has already been up significantly in the last couple of months to reflect these increases. The share price is up over $100 from 150 to 250, and I downgraded the rating on the stock. I had it rated as a buy a couple of months ago, but since the stock price increased, I told investors, okay, the accumulation phase for Broadcom stock is on pause. The valuation is a little too expensive for me right now, even though it's a great business. So I placed this stock as a hold, and I updated that recommendation today as well. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.